Hi there, good morning and thanks so much for starting your morning with us. This is Market Cafe and you're watching ET Now. I am Snehi Shah and with me is Shreyansi Singh. Shreyansi, wishing you a very good morning as well, and take us through what the global markets are looking like. Another good day in trade for the US markets as well.
Absolutely, and what's even more important is the current backdrop. So now when you look at the move, it was a modestly winning day on Wall Street. The S&P 500 ended up 0.1% up and rising closer to those record levels. You did also have the Nasdaq composite that added nearly 0.2% in the session, while the 30 stock Dow also finished 0.3% higher. But the moves were largely sort of muted. But this is of course against the backdrop of investors looking towards the end of what's been a strong year for stocks. With just 2 sessions left in the trading year, the blue chip Dow and the S&P 500 are poised to finish higher by more than 13% and 24% respectively. Now the latter is within about 0.5% of its highest closing level, which was set in January 2022. Meanwhile, when you look at Nasdaq, that is also on track for its best year since 2003, climbing more than 44%. Now this outperformance has largely been driven for the Nasdaq by the artificial intelligence craze, as well as a rebound among the mega cap tech names that we've seen. Now, the 3 major indexes are also all on track to notch their 9th straight winning week, and that underscores the market's late 2023 rally.
Well, absolutely. So good moves coming in on Wall Street as well. But let's shift focus and let's also take a look at world stocks overall, because world stocks have soared to the highest level in more than a year amid the dollar index hitting a 5-month low. Hopes of a loose credit policy stance boosted the MSCI stocks across the globe, which were up by 0.4%, a level that has not been seen since October last year. Expectations continue to mount over the Fed Reserve's rate cut plan starting in the new year as well, and in line with expectations of lower interest rates, the benchmark 10-year Treasury yield fell to a 5-month low, while the 2-year Treasury yield tumbled to a low not seen in the last 7 months.
Absolutely, and when you take a look at oil prices also, you've seen an interesting move coming in. When you look at oil prices, they fell nearly 2%, eating into the previous day's gains as investors monitor developments in the Red Sea, where shippers are returning despite further attacks. Now, when you look at US crude, that fell about $1.46 or about 1.9% to settle around that $74 a barrel mark. While when you look at Brent, that declined about $1.4 or 1.7% to settle around that $79 a barrel mark. Now, you've got the Danish company Maersk that said it has scheduled several dozen container vessels to travel via the Suez Canal and Red Sea in the coming weeks, after calling a temporary halt to those routes this month after attacks by Yemen's Iran-backed Houthi militia. Now, both the Brent as well as WTI benchmarks settled more than 2% higher in the previous session as the latest attacks on the ships in the Red Sea prompted fears of shipping disruption. Now, when you look at oil output in Russia, the 3rd largest producer in the world after the US and Saudi Arabia, that is expected to be steady or even to increase next year as Moscow has largely overcome Western sanctions. That is the word coming in from a lot of analysts. So let's see how that also pans out for crude prices.
Absolutely. And with that, let's also take a look at all the important cues that you need to be keeping on your radar today. And let's look at global cues first, because you've got 2 important pieces of data coming in from the United States, and that's the initial jobless claims numbers as well as the crude oil inventories number today. Shifting focus back home then, when we look at corporate action, well, today is a Thursday, so it's a monthly as well as weekly expiry, and well, the last expiry of 2023 as well. Looking at individual counters then, Swan Energy will be in focus because the board is going to consider proposal for fundraising today. The board of PNB is also going to meet on fundraise plans for the next year coming ahead. And well, you've also got Somani Ceramics, that's going to be in focus because the buyback issue is going to close today, so keep your eye out on these counters as well. The lock-in period is going to end for 2 recently listed IPOs. That's Fedbank Financial as well as Flair Writing. And well, when we talk about the primary markets as well, you've got Azad Engineering. Now this kid is going to list on D Street today, so keep your eye out on all of these cues today.
Well, absolutely. So we'll keep an eye on all of those cues that we have to be looking out for. But news that we're tracking this hour is that the New York Times has filed a lawsuit against Microsoft and OpenAI on the back of copyright infringement and abusing the newspaper's intellectual property. The publisher said in a filing that it seeks to hold the companies accountable for the billions of dollars in statutory and actual damages.
Well, and Tesla is poised to score yet another record quarter for EV deliveries. However, still falling short of CEO Musk's lofty 2 million annual goal set at the start of the year. Tepid demand and pricing wars have allowed Tesla to be the unchallenged player in the space, resulting in the stock more than doubling this year itself.
And let's take a look at tech giant Apple that scored a victory after the US appeals court paused a government import ban on company's popular smartwatches following a patent dispute. Now, the court agreed to pause the ban while it considers the request for a longer-term pause during the process. In a reaction, shares of Masimo Corporation, the company that filed the complaint against Apple, fell nearly 5% thereabout.
Let's take a look at what's happening in Turkey, because Turkey has increased the monthly minimum wage, marking a 49% increase from July levels and a 100% hike from January. Now, this move comes at a time when inflation in the country has been sitting at lofty levels of 61% just last month. Now, what's left to see is when the central bank begins its monetary tightening to counter this impact.
Well, India's tourism has rebounded with over 7.2 million foreign visitors from January to October this year, marking a post-pandemic surge. Notable rise in leisure travelers exploring historical marvels like Taj Mahal and religious sites including Varanasi. My colleague Astha Chopra filed this special report. Take a look.
Over 7.2 million foreign visitors travelled to India in January to October period, and close to half of the visitors visited the city for leisure or holidays. The figures highlight a gradual comeback of sorts for India as a preferred destination among global tourists following the COVID-19 pandemic that led to lockdowns across the world, confining population indoors. The overseas tourist arrivals are a remarkable increase from about 4.7 million during January-October period last year, but falls short of about 8.6 million for the same period pre-COVID phase in 2019. India has always been on the side of international tourists who crave for a peek into the nation's historical heritage sites like Taj Mahal or the structures from ancient empires such as Vijayanagara in Hampi or the Mehengarar Fort in Jodhpur. The number of overseas visitors coming to the religious sites such as Kashi, Varanasi or Bodh Gaya is increasing. The likely opening of the Ram Janmabhoomi temple at Ayodhya in January is widely expected to fuel the surge in the number of overseas religious visitors to the country, mainly in Indian diaspora in 2024.
As the tourists are coming into India, there are lots of new segments that are developing. Buddhist tourism, for example, Bihar has taken a reasonable amount of business there. Equally, I think, Banaras has become quite a favorable destination, especially because people are looking more at experiential travel. As time goes on, I think, Kashmir will also gain its earlier status, which was one of the best destinations. It used to be called the Switzerland of the East.
Global travel is surging, gauged by the destiny of flights overland. India has been a gainer from this trend in the post-pandemic era. The hospitality industry is bolstering capacity to manage the offshore visitors inflow. The number of hotel rooms in the country have risen to about 1,65,000 in FY23 from about 1,53,000 in FY22, according to statistic data. The capacity is forecast to rise about 2 lakh by FY27, the data shows. Almost a quarter of overseas visitors who visiting the country in the Jan-October period are people of Indian diaspora. Many of them, while holding foreign passports, also carry OCI or Overseas Citizens of India cards that gives them most rights of Indian citizens enjoy, including residency. Medical tourism is emerging as an important reason for international travelers to visit India. Nearly 7% of the foreign visitors visited country for the medical reasons. Many of such visitors are from Africa, Middle East, and even far-flung Caribbean and South America. India is endowed with a true diversity in its geography and climatic regions. From the mighty Himalayas to the north to the Thar Desert in the Rajasthan, tiger reserves of Jim Corbett and Ranjithambore, dense flora and fauna of western and eastern Ghats, the Portuguese heritage of Goa, and the long beaches in Konkan and Kerala. India is bracing for its most promising year 2024 in terms of foreign business tourism, leaving all the sad and bad memories of COVID-19 behind. The future of foreign tourism looks good, but obviously it comes with a factor of geopolitical factors as well. We expect more footfalls of foreign tourism in 2024.
Well, Astha, thanks so much for taking us through that. Now, ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular as well as disciplined investing. Nivesh Day is being celebrated on the 5th of every month. So join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Well, absolutely. With this, we're timed out on this segment, but we'll see you with more news and updates on the other side. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. Australia stocks kicked off the day with a positive note, and they're hovering around those two-year highs that we've seen. While when you look at Japan, you're looking at a little bit of, a negative move coming in. So, well, let's take a look at ASX 200, and it's holding at its highest level since April 2022. Index is also set to end the year decidedly higher at 7.7%. And when you look at KOSPI, also attempting to sort of cling on to gains from the previous session, up about 0.6% on your screen right now. When you look at Shanghai, also up about 0.4% thereabout. And so the only one that is coming in with a negative move right now is Nikkei at around those 1%-ish, at around those 0.5%-ish levels right now. So that is what is happening with the markets. Now, when you're looking at the implied, yesterday we closed around that 21,654 level. You're seeing a gap up open, so let's see how it pans out for our markets today.
Well, absolutely. Let's hope this rally that we saw yesterday continues today as well. With that, let's also take a look at the power. Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, as we head into a new year, let's take stock of how the stocks and indices move in the month of January. My colleague Somit is standing by with some interesting data collated over the years. Take it away, Somit.
Yes, 2023 has been a very strong year for the markets, but what seasonality is indicating is that the January month could be on the weaker side. Firstly, on the stock specific side, if you see, Religare is the only stock which has declined in the last 10 Januaries that we have seen on a consecutive basis. The average decline has been around 11% odd. Other than that, there is Engineers India, which has declined around 9 out of the last 10 years in the month of January, and the average decline has been around 8.5%. When you see index-wise, the headline indices, the Nifty 50 index has declined 7 out of the last 10 years. Nifty mid cap and small cap, which are the broader indices, have declined around 6 out of the last 10 years in the month of January. Apart from this, when it comes to the sectoral indices, Nifty metal has seen a decline of around 8 out of the last 10 years. Nifty realty, Nifty pharma, and Nifty PSU bank index have declined around 7 times out of the last 10 years. When it comes to Nifty bank, Nifty energy, Nifty FMCG, and the Nifty auto index, they have declined around 5 out of the 10 times, while the Nifty IT has the most positive ratio because it has managed to decline only 2 times in the last 10 years. The remaining 8 times it has managed to gain in the month of January. When it comes to stock specific action now, list of stocks that have declined for the last 5 consecutive Januaries. India Bulls Housing with an average decline of around 8%. Then there is Z Entertainment, Glenmark Pharma, and Descent, which have declined around 8 to 9%. This is the average decline that we have seen in the last 5 consecutive Januaries. Apart from that, there is AB Capital, Glenmark Pharma, Gujarat Pipavav, JSW Steel, HDFC AMC, which have declined anywhere between 7 to 8%. And then there is Shipping Corporation of India, Kansai Nerula, Cochin Shipyard, and Star Cement, which have declined anywhere between 5 to 7% on a consecutive basis in the month of January for the last 5 years.
Well, absolutely. So it'll be very interesting to see how this plays out in January. But let's also take a look at cement. Now, cement channel check suggests that prices continued their downward trend in December, but the average prices are still higher on a quarter-on-quarter basis. So, Somi, help us understand this as well.
Well, because of weak demand, we have yet again seen a decline on a month-on-month basis when it comes to cement prices. All India basis, cement prices have declined around 2% in the month of December. But on an overall basis, if you see for the quarter ended, that is the third quarter of FY24, the prices are still higher by around 2.5%. So some green shoots could be seen on the earnings front when it comes to cement companies for the third quarter of FY24. Now, if you see region-wise, northern region has seen the highest decline in prices, around 3.8% on a month-on-month basis. Now, this is the highest decline that we have seen in the country. Now, dealers in Jaipur have mentioned that prices have actually gone back to the first quarter of FY24 level after reaching its peak in the October 2023, and this could be because of the election that we had seen in Rajasthan, temporary construction ban, and also because of winter that we had seen in the northern region. When it comes to the southern region, the prices have declined the least by only 0.9% on a month-on-month basis, and dealers are suggesting that the demand continues to remain sluggish in the southern region. In the eastern region, now do remember, eastern region had seen the highest price increase in the third quarter, but again the prices have declined by around 2% in the month of December. And in some regions like in Bihar, Jharkhand, in West Bengal and Odisha, dealers are suggesting that the entire price hike that was taken in the month of October has been completely rolled back now. When it comes to the central region, the prices have declined by around 1.7% on a month-on-month basis, and though demand has been lower than what the street was expecting, the price decline is still low, not as much as what the street was expecting. Hence, there could be some much more price decline going forward. That is what the dealers are suggesting. And lastly, when it comes to the western region, the prices have declined by around 1.5%. In the Mumbai market, the prices have remained largely stable, but in Pune, Nagpur and Surat, the price decline has been much worse, is what the dealers are suggesting. Now, demand environment has been stable in the western region, but what dealers are saying that the dispatches from Sanghi Industries has been on the higher side, so this should keep prices on check when it comes to the western region specifically.
Well, thanks, Amit, for taking us through all of that. Let's shift focus from cement to aviation now, because Indigo anticipates robust air travel demand in 2024 amidst global supply chain challenges. The overall operating environment remains favorable, and strategic investments in personnel, aircraft and infrastructure are underway for sustained growth as well. The airline is optimistic about the future and is energized by the anticipated growth path ahead, signaling confidence in its resilience and commitment to ensuring a strong and prosperous future.
Well, absolutely. Let's take a look at some of the regulations that we've seen play out this week. Now, the Ministry of Electronics and Information Technology has issued an advisory on illegal loan as well as betting apps. Now, let's go across to my colleague Sumita Karir, who's standing by with more details. Sumita.
Right, so the IT Ministry has issued an advisory to social media intermediaries to take additional measures against illegal loan and betting apps. The onus is on intermediaries. It has been put on intermediaries to actively prohibit and remove ads of illegal loan and betting apps that have the potential to scam and mislead users. MOS, IT and Electronics Minister Rajiv Chandrasekhar says, and I quote, "Through yesterday's advisory, we are now cracking down on advertising of fraudulent loan apps that many platforms are carrying." So this is a really crucial step as far as cracking down on illegal loan apps are concerned that really cheat numerous users. The advisory, remember, is the latest in a series of notices sent to intermediaries asking them to follow the norms, follow rules under IT Act and prohibit hosting of harmful content, which includes child sexual abuse material, deep fakes and illegal loan apps. also to ensure a safe and trusted internet, something that Minister Rajiv Chandrasekhar has reiterated on multiple occasions. Remember, in October, a key meeting was held between MeitY and RBI as well as the Finance Ministry, in fact, for working out a robust mechanism against these illegal loan and betting apps. A push was then given on designing a detailed KYC for companies so only legitimate apps can access and use the Indian banking system, and blocking those that are not legitimate. Dubious loan apps, remember, saw a rise during the pandemic, several of which were later banned by the government as well. These were, remember, involved in harassing borrowers or were bad copies of genuine fintech apps. So this space will be quite interesting to watch and will be one that will be crucial to watch indeed as it deals with the safety of users.
Absolutely, Sumita. Thanks so much for taking us through that. Let's shift focus and talk about the RBI, because RBI has released a report titled Trend and Progress of Banking in India 2022-23. The report emphasizes that the Indian banking system and NBFCs remain sound and resilient, backed by high capital ratios, strengthening asset quality and robust earnings growth. Let's go across to my colleague Anurag Shah, who has more details on this report. Anurag, good morning. Take it away.
So today's RBI Trend and Progress report shows that Indian banking system and NBFC remains sound and resilient, mainly backed due to the three reasons: high capital ratios, strengthening asset quality, and robust earning growth. So these are the three reasons RBI has mentioned in the report. And in FY23, the scheduled commercial bank has shown a growth of 12.2%, mainly driven by the credit to retail and service sector. In the report, RBI has mentioned that gross NPAs has gone down in last 3-4 years. Drastically, the improvement has happened in bank's balance sheet in front of asset quality. So presently, the gross NPA ratio stood at 3.2% till the September 2023. So it's a very positive sign for the banks. And as per the report, the higher net interest income and lower provisioning has boosted the net interest margin and profitability of the banks. But one more advice RBI has given to NBFCs companies to broad-base their fundraising limit. The Trend and Progress report of Indian banking has been released by RBI today, which shows that Indian banking system and NBFC remain sound and resilient.
Well, thanks Anurag for that update. But let's also take a look at what is happening in the world of EVs. And soon you can get a separate connection and meter for charging your electric vehicles. Power Ministry's draft electricity amendment rules have sought comments on various issues, including separate meters for EV charging at residential premises. Take a look at this report that Prakash Priyadarshi filed earlier.
Yes, an important development coming in for the power sector, as Power Ministry has come out with the details of draft electricity second amendment rules 2023, which says new provisions will be made to enhance EV charging infrastructure in the country. As per the draft rule, consumers in group housing societies can take separate power connection for their electric vehicle. In addition to that, tenants will also be allowed to apply for separate power connection for the electric vehicle, and DISCOMs cannot deny. In addition to that, when it comes to tariff, that will come under domestic tariff rule, which means consumers will have to pay domestic tariff for their separate power connection, which means it is going to bring down their overall charging cost. Along with that, RWA and group housing societies cannot charge beyond retail tariff if electricity being supplied through a single unit. Moving ahead, DISCOMs will have to install a separate meter within 3 days of complaint if meter reading not commensurate with the consumption. An important development coming in, as you are aware, that the Power Ministry has already issued first set of draft electricity rule, and the second part is being proposed in order to incorporate some more provisions to encourage consumers to set up new charging station in the country.
Well, thanks Prakash for taking us through that. Now ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Nivesh Day is being celebrated on the 5th of every month, so join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Well, with this, we're timed out on this segment, but we'll see you with more news and updates on the other side.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Now I'm being joined in the studio by my colleague Ansh, who's here to take us through the FNO snapshot. Ansh, what's the derivative snapshot looking like today?
Right, starting with Nifty first, Nifty gave a decisive breakout from its 21,500 mark in the previous session. Also, the index seems to be on track to register its biggest single series gain in 34 series, almost 3 years. Let's see what happened in FNO segment. On option front, we are seeing very active call buying at 21,700, indicating Nifty to touch this level, whereas on downside, we saw very active put writing at 21,600, indicating good support base here. Also, we have collated data for the month of January series, and as per that, only 1 out of 5 January series index has been in green, giving an average return of minus 0.6%. Let's have a quick view on Nifty Bank 2. Index seems to have given a slight breakout from its 1,500 range, and also in Nifty Bank is on track to register its biggest single series gain in 14 series. Whereas in index options, we are seeing very active call buying at 49,500 mark, which is almost 2 to 3% from the current level, indicating Nifty Bank to touch around this level. Whereas on downside, we saw very active put writing at 48,000 psychological mark, which gives a good support here. As per January series seasonality for Nifty Bank, 2 out of 5 Jan series were in green, giving an average move of minus 0.2%, almost flat. Shifting our focus to what FIS did, in index future, we are seeing net addition of around 3,300 contracts on downside, due to which the total long position have slipped from 64.4% to 62.6%. Now, the total long has been slipping from last 3 sessions. Similar thing had happened in mid-September as well, when Nifty's FII long position of index future had touched around 66% and it started correcting from there. At the same time, Nifty gave a correction of around 5 to 6% as well. So in a nutshell, despite market touching record high levels, Nifty Bank making a biggest single series gain, the historical pattern of FII and January seasonality shows a bit of potential hurdles in the coming series, not particularly today. Today is the expiry, so expect some volatility in the market. My view, one can expect Nifty to be very positive till it stays about 21,500. If it drops below this, then you can think about the seasonality and FII, which is suggesting a slowdown in the market.
Well, we're also looking at Greenply Industries. Now, they've approved to transfer a total of 51% shareholding in ARM to Greenply Middle East to an investor group for around 13 crores. So how are you looking at that development?
Right, so Greenply has, as you said, has approved the transfer of 51% stake and controlling interest in its wholly owned subsidiary Greenply Middle East, which is responsible for actually operations in Gabon, which is in Africa, to Mr. Indranil Bhan, who is existing CEO of Gabon operations, and to Mr. Sudeep Jain, who is the director of Greenply Middle East. The deal consideration is for around 13 crores. Let's see what are the issues with Gabon facility actually. Gabon operations have faced challenges contributing to operational difficulties since FY21. Factors include disruption due to COVID and demand headwinds from US and Europe, leading to losses in FY23, which actually persisted in first half of FY24 as well. Let's have a look over the positives and negatives of this hive-off. Starting with positive first, the move aims to cut down the losses associated with Gabon operations. Secondly, Gabon's operation contributed significantly to the net debt, and the hive-off can lead to a reduction of net debt from 690 crore to around 470 crores. The transaction is also expected to, of course, enhance the return ratios as well. Talking about negatives, Gabon's operation have been a drag on consolidated metrics and have incurred losses, creating a potential disruption as well. So after the transaction, the question arises regarding how Gabon operations will service its debt, especially considering its current inability to generate sufficient EBITDA.
Well, thanks so much for taking us through that. Greenply will be in focus on the back of that share transfer. But what other stocks are going to be in focus today? Which counters could be potential buzzers in today's trading session? To answer this, we're being joined by my colleague Vamakshi. Vamakshi, good morning. Take it away.
Well, yes, let me first start off with Bajaj Holdings. In fact, we will also be keeping an eye out on a few other counters, Reliance Industries as well as Infosys. Keep in mind that Bajaj Holdings has acquired Reliance Industries shares worth almost 12.97 odd crores, and this in fact takes the cumulative holding to 0.03%. They have also acquired shares of Infosys worth almost 15.62 crores, and that is the reason you should watch out for these counters. Hudco will also be in focus. They are expected to execute an MOU with the state government of Gujarat for investment of almost 14,500 odd crores for financing the housing and urban infrastructure projects in the state of Gujarat. Also watch out for Oil India. They have received a letter of intent from NTPC for procurement of spares with base value of almost 10.5 crores. Purchase orders have also been received for supply of shares from Bokaro Power Supply with a base value of almost nearly 10 crores. Sula Vineyards will be another stock that we will be watching out for, and that is because wine tourism has achieved new heights over the Xmas weekend. They've seen nearly 5,000 visitors on December 24 and nearly 12,000 visitors from December 23rd to December 25th. PTC Industries will be another counter that we will be watching out for, and that is because PTC Industries and Nasmith UK have actually signed an MOU for collaboration to leverage their capabilities for offering solutions to defense and aerospace customers in India and abroad. City Union Bank will be the last stock that we will be focusing on, and that is because the company has opened 4 new branches in Maharashtra, Karnataka and Telangana on December 27th, taking the total branch count to almost 762 branches.
Well, absolutely. So we'll be keeping an eye on all of those counters, Vamakshi, but you have a host of brokerage notes this morning as well. Which are the ones that you're looking at?
First, start off with Lupin. We have a note coming in from Spark Capital. They have said that the domestic business especially is seeing some stability in the in-licensed portfolio. The MR productivity improvement is also expected to aid margins. Moving on to the international business, out here they're expecting that, especially the US markets, they're expecting generic Suprep and Prezista competition to be offset by certain levers, and that is the reason why they believe that the base margin levers are expected to play out from FY 25 and 26 onwards. So overall, keeping in mind all of these factors, Spark Capital has gone ahead and upgraded its rating on Lupin from add to buy and also hiked its target price to 1,440 rupees per share. The next stock that we will be watching out for is CESC. We have a note coming in from Antique, and they have highlighted that the company is undergoing radical changes. They are also setting up a 3 gigawatt renewable energy capacity, and in fact this can in turn add nearly 1,800 odd crores to the company's EBITDA. Not just that, Chandrapur is expected to reset PPAs at a higher tariff, which in turn could add nearly 600 odd crores to FY26 EBITDA. So a lot of positives playing out for CESC, and that is the reason why Antique has maintained its buy rating on CESC and hiked its target price to 150 rupees per share. Moving on to Godrej Consumer, then we have a note coming in from Phillip Capital, and they have highlighted that the company is poised for sustainable double-digit growth in FY25. The India HI business is disruptive innovation is taking place in this place. Apart from that, the international margins are also rising. So given all of those factors, Phillip Capital has maintained its buy but hiked its target price to 1,350 rupees per share. And lastly, let's focus in on Aarti Industries. Keep in mind the company announced that they had entered into a 9-year long supply contract with a global agrochemical and solution company, and we have a note coming in from Morgan Stanley on the same. They highlight that the long-term contract implies annual revenue of nearly $40 million. They also believe that the contract implies a 3 to 4% accretion to the EBITDA and nearly 6 to 7% accretion to the earnings from FY25 to 26. So given all of those factors, Morgan Stanley has maintained its overweight call on Aarti Industries.
Well, thanks Vamakshi for taking us through that. Let's also talk about 2 more counters that will be in focus today on the back of their management meets, and that is Cello World as well as Marksans Pharma. Winnie is joining us with the key takeaways from both of these management meets. Winnie, good morning. Take it away.
Good morning, and firstly, let's talk about Cello World. Now, when you're looking at it in terms of what the management made when they made BNK Securities, what they say that mainly the consumer segment accounts to a lot of opalware, glass as well as glassware segments, which accounts to most of the sales of the consumer segment. So that is going to be a growth driver for the company going forward. The company recently expanded its opalware capacity at a peak utilization sales that is expected at around 400 crores to 425 crores going forward. Once this expanded capacity actually is used in full capacity. Other than that, the greenfield of the soda lime glass plant in Rajasthan, that's expected to come into stream from next quarter. So that will be furthermore adding to their revenues as well. And they're expecting a high double-digit growth as well as sales growth as well as gross margin in the writing instrument segment as well. Gross margin is expected at around 58 to 59%. Steady growth is expected in the furniture business as well. And the company expects an 18 to 20% growth over the next 2 to 3 years as well. Other than that, what the management is also expecting is that the EBITDA margins, that is going to be at a sustainable level of 23 to 25% as well. They're maintaining a capex of around 40 to 50 crores over the next couple of years. That will be the maintenance capex. They're not going to require any new capex as of now, is what the company highlighted as well. So yes, because of that, we're keeping an eye out on Cello World as well. What BNK Securities is still highlighting is that they believe that there is some concerns that they have. They do not still understand in terms of the past how the sales were broken down in the past for the company before FY21, because it was different promoters were handling this. As of now, yes, they have not initiated coverage on this one, but they're still keeping a close eye on Cello World. And yes, this is the key highlights that they had when they met with the management and went to one of the plants in Daman as well. So let's keep an eye out on Cello World.
Well, absolutely. So we'll definitely be keeping an eye out for Cello World. With this, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyanti Singh, my co-anchor Snehisha, as well as the entire team that put this show together. Thank you so much for watching. The market takes the action forward.